Happy Sunday, everyone. This is going to be our prep going into the week. Start off with SPY, QQQ, and IWM. And look at the ETF, see what we're looking at for this upcoming week, maybe for the next week or two. And then we're going to get into individual stocks that I like for long term that I'm personally buying, or stocks that are heating up right now, and then stocks that are dying off right now as well. I'm not going to waste your time. Let's just get right into it. If you're new here, make sure to leave a like, subscribe, and if you watched this entire video, let me know down below. Also, if you have a chart preference, let me know that too down below. Starting off, we're going to look at SPY here. So the price action in December, you can see these candles right here. It's like we're just kind of grinding upwards, but we don't have any large movements. It's basically range bounding without going side to side. Like it's not going, it's not a rectangle consolidation. It's like a, consolidating up in a way. You can see with all these other candlesticks, we're actually having some like swings and large movement. Right now, we have been trading in this tight channel, since the beginning of December. And if you've heard people like say, man, this price action sucks, I hate December. Well, you can see this is exactly why. They're talking about this range choppy price action to the upside. Let me delete some of these lines and let me give you all my prediction, my analysis, and yeah. All right, so how I'm going to look at this candle. This is a large candle that we had Friday. Breaking this line right here, we're probably going to go head towards $700 on the S&P or SPY. Levels for the week, maybe even next week. If we decide to chop within this range, this could still play out maybe next week. But for now, looking at SPY right here, we're trading in this uptrend right here. We have, this large candle. We have wicks on both sides of the candle. We have a high up here. We have a low up here. And honestly, how I'm going to personally play it, if we break that high, I'm looking for more upside. If we break that low, I'm looking for more downside. Now, downside price target, I'd be targeting this support right here, 675. So a $4 drop after we hit this, put wall for the week. It's going to be our put wall for the week. And this is going to be our price target for the week if we see downside. Now, with our call wall, if we see above that, then I'm going to just go ahead and kind of shoot for the stars here and say I'm going to be looking for $700 on the S&P 500. We're going to go ahead and make this a green since it's upside. And this is really how I'm going to play this for this week. Now, day by day, we can go look at some important levels day by day. But there's nothing too crazy. I can say if we break above 684, if we break above that, you can have a risky call wall right there. Risky call wall. Because if we break over that high, we're probably going to be sent up to the top of the range. So you could target, 688 or 690. This level up here on these smaller time frames. Up there. And then our put wall is going to stay the same right there because we're kind of on the smaller time frames. We are trading outside of this trend line. So, technically on the smaller time frames, we can say we're bearish right now, but on the 24-hour, not much is actually happening. So we'll see what happens going into this week. But this is going to be my call and put walls going into this week. Make sure you mark these levels down because I truly believe if we see, a call wall, risky call wall, or regular call wall, or a put wall, whatever it might be, taken out, I really do believe that we'll head to one of those price targets. All right, the next ETF we're going to look into is QQQ. If you're looking at QQQ right here, I had that same trend line, and you can see this looked a lot weaker relative to SPY. How I'm personally going to play QQQ, this is a pretty large candle as well on the 24-hour. Let's look at the weekly. Okay, the weekly is kind of just trading side by side. I didn't look at the weekly on SPY, but they're trading side by side right now. I wouldn't be surprised if we had some type of relief bounce to start off the week, and then we'll see where we go from there. So, we ended the day off at 612.82 down here. So I wouldn't be surprised if we saw some type of, open up here, around that 617 to 620 level. If we do not open up there, what I'm going to look for is something like this, some type of relief bounce to this level, and we'll see what we can do from there. But how I'm going to personally play this, we're going to have our put wall down here, see if we have continuation to the downside. I'm going to target this level at 604.79. Actually, we can just say, let's say 606 on the dot, $4 drop from that level. We're going to do put wall right here. So put wall underneath that, that wick. And then we're going to do price target down here at 606. The reason why the price target's down here is you can see it acted as a support recently over here in this price action. So we're going to use that level. We know it's respected. Look at that. We know this level is pretty respected. So we're going to see what happens down here. Now, I'm not going to lie. I don't even like the idea of a call wall, to be honest, right here. Anywhere right here. Just because we did break this trend line to the downside. And so if I'm going to play a safe call wall, then I would like to see above this, you know, above this break again. Go take out this high right here, honestly. But what we could do is, since I'm expecting a relief bounce, we could see how it likes to hold this zone we're currently at right here. So if you look, this is a zone right here. So we could just see how it reacts on the larger time frame. This is going to be the hourly. This is going to be the 4-hour time frame. We're going to see how it reacts, and if it can hold this support right here, then yeah, I'm expecting it to go all the way back up to that 617, 618 level. So if you want to be a little bit riskier on tech has been selling off. Tech Qs have been selling off, as you can see right here. Last week it chopped higher. Friday it just went straight down. But if you want to be a little risky here, I kind of like the idea of some type of bounce, you know, to this level. So right out the gates, if we open down here in this zone, what we could look for is something like this. Long position, put a stop loss underneath that put wall. It might break under this level to sweep and manipulate. So you could wait for that. So if it comes under right here, break that level and then comes back around, that would be your entry on that come back around. If you want to be risky here and look for upside, a relief bounce or something. But this is what I would be looking at. You know, you could target any of these highs, whatever you would want to target. But the whole point is you put stop loss underneath this zone right here and then look for that relief bounce towards upside. If we don't have a gap up Monday or whatever it might be. Now, if we continue to sell off, so that was my bullish thesis. I don't really necessarily have a call wall unless you want a safe one way up here. But I mean, you can do that if you want, but I don't think there's like a massive point to do that. I think playing this zone right here would be better off, and then seeing what it does up here at this 620 level, because that's going to act as potentially a resistance too up there. All right, so these are the zones that we're going to be looking at for this week on QQQ. If we can hold this support, we're going to look for a bounce to the upside right here. Something like this, go back towards that resistance. If we continue to sell off in this momentum and we break underneath this support, you might be like, why is your put wall inside your support? Well, it's not necessarily, I'm not going to just enter puts just because my put wall is hit. I want to see, you know, a 15-minute confirmation that we're breaking it to the downside. So a 15-minute candle to the downside underneath that put wall. And maybe even some type of retest and rejection before I enter. So that is how I'm going to look for the downside play. So if we continue to sell off, we break through this support right here. I want this support to become a resistance. So what that means is break the support, become a resistance, you know, reject off right here, and then go towards my price target. That is my downside thesis on QQQ. So we have upside and we have downside. Make sure to draw out these zones. Make sure to draw out these lines. And this will help you like trading throughout the week. Our individual stocks, we're going to start with the borings first and then get into, you know, the tech stocks and the ones that move a lot quicker. But UPS, I have been bullish on UPS for a minute now. If you have been in the live trading sessions with me or the pre-market watches, or even my ex, I've been talking about UPS a lot recently. So honestly, I still think this is going to go into this zone, you know, between 103 to about 107. Yes, it's a large range, but this could act as a supply zone up here, which means it could reject up here. But I like the idea of this going, you know, at least $3 to $4 higher from where it's at, as long as it can stay above 96.78. Bullish on UPS, looking for more upside. I have a share entry, I think somewhere down here before this earnings move. So I am really in the green on these shares. Now we're going to go into Nike. Nike, guys, I've been looking at for, I don't know how long, probably 6 months now. But Nike, The monthly time frame looks beautiful still. I'm still bullish on Nike. I still have my long-term price targets of, $80 first and then $100 second. And wherever it wants to take us after that, I don't really care, but I would really like to see that $100. Reason being, you can see right here, Nike has dominated for a long time now, and we are seeing this pretty big downtrend play out on this monthly time frame. And you can see we have rejected up here, rejected up here, rejected up here, and then there's a lot more rejection. And we finally broke out to the upside. And not only did we break out to the upside, we are in a large demand zone. So this box right here is a demand zone. This means, it's been respected multiple times in the past. So not only we have a breakout of the trend line, we are trading in a demand zone. I like the idea of buying shares here for a long term, not looking at it for a while. But yeah, so looks good. We broke this trend line to the upside right here. Came back down, retested it, bounced off. Also all inside this demand zone. I like upside. I like $80. And then after $80, I like $100. So this is not really an option place for me. If I was buying options, I would be buying leaps. So like a year plus out on Nike on the expiration. But right now I'm just in shares for the long term. I have a lot of shares of this one. I'm looking for those price targets to the upside. With that being said, I really like Nike for an upside move. This is kind of like a buy and forget. If it goes lower, I'll probably end up buying more. But for now, I really just like it above this $60 range. Say above here, I want more upside. Target, this is another one that I like going into 2026. I think this is a buy the dip opportunity on shares or leaps. Leaps meaning an expiration 6 months to a year out or plus. Really love this idea. This is one of my favorite setups, just because this, guys, you can see that we have respected this level so many times right here. And we're back inside of this level. So as long as it can hold this level, and this is how you play supply and demand, guys. As long as it can hold this level, I'm looking for higher. You can target 120. I'm targeting that first, but this could go, to 180 potentially or even higher. So I like the idea of target down here for a buy the dip opportunity. The monthly looks great. And typically when you're buying these like slower moving stocks, you want to be looking at the monthly, especially if you're buying it for like a long-term trade or like a couple week swing trade. You want to just check out the monthly to see how it looks. But I love it inside this zone. The best entry is probably around this, bottom of the range, around $85 or so. But it looks really good to me. To some tech stocks now. So on Microsoft, you can see right here, I have all these zones already charted out. You can see that the bottom of this range has acted as a support previously. So as long as we can stay above this bottom of the range, we should see upside again. But like I was telling someone in one of my lives the other day that like with Microsoft, all you need is supply and demand. You don't really need like chart patterns or like, trend lines or anything. Supply and demand on Microsoft is just so A+. So how do you play supply and demand? This is a demand zone because we are trading above this zone. This is a supply zone because we are trading below it, and we've also rejected a couple times. But the way you could flip these is if this bounces right here, right, and breaks through this supply zone, this now turns into a demand zone. It's no longer a supply zone because we are trading on the opposite side of it. So with Microsoft, these key levels and key zones can really help you trade it. And, our next big zone is way down here, I would say. I would say this is our next zone down here. You could say this one's a small little zone as well, but that's basically where we're at right now. But yeah, this is how you could trade zones on Microsoft. So mark them out, trade supply and demand. If we're above one zone, you can play calls. If we're rejecting a zone, you can play puts. That's kind of how I like to play Microsoft when it comes to these zones. All right, let's go into NVIDIA. So like I said, tech has been selling off, specifically NVIDIA. I wouldn't say NVIDIA has actually been selling off. I would just say we've been consolidating for quite some time, and we had some type of little pullback right here. But the interesting part is this zone has been respected so many times already, and the fact that we are trading underneath that zone again leaves me with questionable thoughts because we could just come all the way back down to this zone now. And if that happens, then tech's going to continue to sell off. So how I would play NVIDIA if I'm playing it short term, I'm not talking about like a long-term trade or anything. I would say as long as it stays below this zone, if it stays below this zone right here, I'm looking for downside to this zone. Does that make sense? So basically use this as a supply zone. If we stay underneath it, then I'm looking to go to the next zone. And then if we break that, then yeah, you can go ahead and call it wraps. We're probably going to see a lot more downside. But not actually. But if we do probably break this, then yeah, we will. But other than that, yeah, this is what I'm watching on NVIDIA. Very simple, very short and sweet. Let's go to AMD now. AMD had a perfect setup. I actually posted this everywhere. As you can see right here, we had this uptrend, right? We had this uptrend. We broke this uptrend to the downside. We created a rising wedge back towards this demand zone, previous demand zone. Why? Because we've respected it so many times, right? Now we're respecting it underneath it. So what does it become? It becomes a supply zone. We came back up, hit that supply zone, rejected it, and getting sent lower. I like AMD for more downside. If you look at the weekly time frame right here, how I would like to play this is, you know, if we can just stay under 230. If AMD stays under $230, which is way up here, that's $20 higher. This has been my plan since like Thursday before we had this large dump. So I basically told everyone, I said, hey, I'm bearish on AMD short term. If we stay under 230, which we did, we came back up and only retested like 225 and rejected. But now you could probably just say 225. If we stay under 225, I'm looking for this weekly gap fill all the way back down to about 187. And if that happens, that'd be a pretty large trade. I don't, you know, actually now I'm thinking about it, I don't think that would happen very short term, but you know, who knows? So I am bearish on AMD as long as it's under $225. If it breaks back above 225, I'm looking for so much higher, something like that. But for now, you know, downside until we break 225, and you could target these lows of 200. You can target 193. You can target all that good stuff down here on AMD. Tesla's looking pretty bullish right now. I've had this trend line right here drawn out for quite some time. We broke underneath it. We rejected. We broke back above. Now we're using it as a support. And how I'm looking at Tesla right here, let me delete some of these lines so it looks a little bit cleaner for you. But as long as Tesla really stays above this trend line, I'm going to continue to look for more upside on Tesla, honestly, to take out these highs. So below 434 on Tesla, I'm looking for downside. Make that one red. You can go ahead and chart this out. This can work for, you know, days ahead, weeks ahead, maybe next month, whatever it might be. Mark out that 444 level. And as long as we stay above that, this 444, I'm looking for more upside. So buying the dip as long as we stay above that. And my key level is at 444. You could say as long as we stay above 444, we should see more upside and continue to take out the highs. Tesla looks bullish to me. And yeah. And that's really going to be it for my watch list going into this week and going into, you know, Christmas time. If you enjoyed this, make sure to leave a like, subscribe, go over these levels, mark them out. Use my levels to, you know, your advantage. Here's a friendly reminder as we go into the week. Remember, discipline. Do not force trades, you know, just because it goes above one level on the 5-minute time frame doesn't mean it's breaking that level on the larger time frame. So remember, the larger time frames are your best friend. They're the most reliable when it comes to trading. Be smart as we're getting into these holidays because we could see volume coming out of the market. And what that means is chop, and that destroys most traders because you see more manipulation, you see more forced trades, you see more emotions come out on traders during those moments. So don't be that trader that sits there all day just trading when price is not actually moving. If you enjoyed this, make sure to leave a like. Make sure to subscribe. Let's have a great week. I hope you have the best week possible. You guys inside of the live trading, everything you need from me is down below in the description. All my affiliate links, all my where I trade at, what tools I use, all that good stuff is down below. So make sure to check that out. I'll see you guys later.